Hi, this is Indranil and you are watching Business Bytes in our channel The Spotlight, India's first online business news channel. In today's Business Bytes, first news we have electric vehicle finance companies are focusing on electric commercial vehicle loans. Second news we have food delivery firm Zomato laid off 500 employees from customer service positions. Third news we have Japan's Nissan to stop manufacturing cars in India and to sell Chennai plant stake to Renault. Fourth news we have mobile phone brand Alcatel is set to re-enter India's consumer technology segment. And fifth news we have US University MIT invested 92 crore in Burger King India's 500 crore QIP as a foreign portfolio investor. In first news, electric vehicle finance companies are focusing on electric commercial vehicle loans. Fintechs like Revfin, Vidyuttech, Turno and Ascent Capital see opportunities to capture market share given traditional non-banking financial companies as banks are not yet active in funding electric vehicles being used for commercial purposes when consumer lending startups are struggling to find stable grounds. Traditional lenders are mostly financing purchase of passenger vehicles by underwriting the customer, while fintech startups are trying to underwrite battery-run vehicles through innovative means, where Revfin initially funded e-rickshaws mostly powered by lead-acid batteries and are now supporting three-wheelers that use lithium-ion batteries. Bangalore-based EV financing startup Vidyuttech operates as a pay-as-you-use service for a battery through which they reduce the upfront EV purchase cost for the consumer by 20 to 25%. Electric three-wheelers used for intercity commercial deliveries and logistics is the market which is growing fast with almost 25% of such vehicles in a few of the large cities which have already moved to EVs. In second news, food delivery firm Zomato laid off 500 employees from customer service positions. Under the program named Zomato Associate Accelerator Program, Gurugram-based food delivery platform Zomato hired 1,500 people last year for customer service roles with a plan to progress these employees into various other departments which includes operations, marketing, sales and supply chain has laid off around 500 junior level employees from this program. This is so far the biggest job cut development at an Indian new age company in 2025 and is preceded by layoff at other startups like Zip Electric, ShareChat and Pocket FM. Zomato has decided to retain around 1,000 of their onboarded employees under the Zomato Associate Accelerator Program, where they laid off the remaining employees for their non-performance and non-punctuality issues. The employees who were asked to leave have been given 2 months' worth of pay as compensation, where presently Zomato is more focused on their quick commerce arm Blinkit to spread over deep pockets by creating more dark stores, and they are already facing a steep competition from their rivals like Zepto and Swiggy Instamart and newly introduced BB Now and Flipkart Minutes. In third news, Japan's Nissan to stop manufacturing cars in India and to sell their Chennai plant stake to Renault. Japan's Nissan has decided to stop manufacturing cars in India and will sell their 51% stake in the factory in Chennai to their joint venture partner France's Renault, when the Japanese automaker would instead utilize Renault-Nissan Automotive India's facility outside Chennai to produce Nissan-branded cars for the Indian market and overseas. Nissan produced nearly 99,000 vehicles in India in financial year 2025, which was their highest ever annual output in the last 7 years. However, only about 28,000 units of these vehicles were sold locally, while the rest of it exported. Nissan's product portfolio is set to expand to 6 vehicles when the company is aiming to increase their local sales to 1 lakh units by the end of 2026. Renault will acquire Nissan's 51% stake in the manufacturing facility, after which Renault Nissan Automotive India will become their wholly owned subsidiary, which will eventually evolve into a contract manufacturer for Nissan, producing existing and new models slated for launch over the next 2 years. Nissan and Renault, both the automakers, would however continue to operate Renault Nissan Technology and Business Center India, which is a captive automotive technology and business center under the current 51% and 49% shareholding structure. And Renault, on their part, is having a plan to introduce 4 vehicles, which include new Duster SUV in India. In fourth news, mobile phone brand Alcatel is set to re-enter India's consumer technology segment. French mobile phone brand Alcatel, which is owned by TCL, is set to re-enter India's consumer technology segment next month with an investment of $30 million to manufacture mobile phones and ecosystem products. Alcatel established in the late 90s and had a broad foundation in the telecom industry, producing diverse range of products including mobile phones, and Alcatel will be the second smartphone maker to enter India in the last 2 years after Taiwan-based Acer had introduced plans to sell their smartphones in India in partnership with India-based Indcal Technologies in 2024. Alcatel smartphones will be made locally by a contract manufacturer, which can be Dixon Technologies. Though starting with the Indian market, the company is aiming to be a brand from Europe made in India for the world. The company will be investing $10 million in above-the-line and below-the-line marketing in a bid for a foothold in the crowded Indian smartphone market, which is the world's second largest in this segment, when the company will have a complete range of consumer ecosystem products to offer a connected consumer experience by the second half of 2025. And in fifth news, US University MIT invested 92 crore in Burger King India's 500 crore QIP as a foreign portfolio investor. Among the world's top universities, MIT, the Cambridge, US-based private research university, invested 92 crore in the 500 crore QIP, that is Qualified Institutional Placement of Restaurant Brands Asia, which is the Indian operator of Burger King. A QIP allows listed companies to raise capital by issuing equity shares, fully and partly convertible debentures, or any other securities, while Restaurant Brands Asia, which also operates American chain Popeyes and Canadian Tim Hortons in India, runs 510 stores in India across all brands. When the company reported same-store sales decline of 0.5% year-on-year in the December quarter and a wider net loss of 50.3 crore compared to a 36 crore loss in a year ago. But their revenue grew 5.8% year-on-year to 639 crore in December quarter end. MIT's robust participation giving a positive signal on India's position as a core growth driver, given its large under-penetrated market at a time most consumer markets globally are nearing their maturity. And the investment comes despite discretionary demand in India staying subdued over the past 4 quarters, especially in urban markets as inflation hit, consumers go slow on dining out, among other consumer sectors. India's QSR market, which also has the presence of McDonald's, KFC, Domino's Pizza and Pizza Hut, among others, is expected to post a recovery this year after a tough 2024, as there is a revival in demand in the new brand success with improving operating leverage. So these were the top 5 business news from Business Bytes in our channel, The Spotlight, India's first online business news channel. So thank you very much for watching Business Bytes, and signing it off.